Did you know there are over a dozen different ways to trade stocks? Some traders make money in minutes, while others wait years for their investments to grow. In the next 10 minutes, I'm going to walk you through each strategy so you can decide which one fits your style and goals. Trading stocks is like navigating a maze. Each turn you take can lead to financial success or a setback. With so many strategies out there, choosing the wrong one could cost you time and money. That's why it's important to understand your options before jumping in. In this video, we're going to map out this trading maze together. I'll break down each strategy, from quick day trades to long-term investments. By the end, you'll have a clear picture of which path might work best for you. Remember, there's no one-size-fits-all approach to trading. Your strategy should match your goals, risk tolerance, and lifestyle. So let's get started and find the right trading strategy for you. Quickfire strategies. Day trading to algorithmic. Now that we've set the stage, let's dive into some quickfire trading strategies. These are the fast-paced, adrenaline-pumping approaches that can make or break a trader in minutes or days. First up is day trading, the strategy that has you in and out of positions faster than you can say market close. Day traders aim to profit from daily price movements, often reacting to news or company announcements. They're glued to their screens, using stock screeners to spot potential trades. It's intense, but for some, it's the ultimate trading rush. If day trading sounds fast, wait until you hear about scalping. This strategy is like day trading on steroids. Scalpers make tons of tiny trades, sometimes holding positions for just seconds or minutes. They're after small profits that add up over time. To be a successful scalper, you need lightning-fast reflexes and nerves of steel. You'll be staring at short-term charts and level 2 quotes all day, looking for the tiniest price movements to capitalize on. For those who want a bit more breathing room, swing trading might be the ticket. Swing traders hold positions for days or weeks, trying to catch short-term price trends. It's less frantic than day trading, but you still need to be on your toes. One of the perks? You can take advantage of overnight price moves. But be careful, there's always the risk of price gaps when the market is closed. Now, let's talk about momentum trading. This strategy is all about riding the wave of market sentiment. Momentum traders believe that stocks moving strongly in one direction will keep going that way. They buy stocks that are rising and sell those that are falling. It sounds simple, but timing is everything. Get it wrong, and you could be in for a wild ride. Last but not least, we have algorithmic trading. This is where the machines take over. Algo traders use computer programs to execute trades based on preset rules. These systems can make trades faster than any human, reacting to market changes in milliseconds. It's impressive stuff, but there's a catch. These algorithms might only work in specific market conditions. If the market environment changes, they might not adapt as well as a human trader would. Each of these strategies has its own set of risks and rewards. Some require constant attention, while others let you step back a bit. The key is finding the one that fits your personality, risk tolerance, and lifestyle. In the next section, we'll look at some slower-paced strategies for those who prefer a more laid-back approach to trading. Slow and steady. Long-term approaches. Now that we've covered some of the faster-paced trading strategies, let's shift gears and look at some approaches that don't require constant market watching. These long-term strategies might be perfect for those of you who prefer a set-it-and-forget-it style or simply don't have time to stare at charts all day. First up is position trading. This strategy is all about patience. Position traders hold on to stocks for weeks, months, or even years. They're not concerned with small daily fluctuations. Instead, they're betting on big moves over time. It's like planting a tree and waiting for it to grow. You might not see results right away, but the potential payoff can be significant. Position trading can be a great option if you're short on time. You do your research, pick your stocks, set your alerts, and then let the market do its thing. Next, let's talk about value investing. This strategy is like treasure hunting in the stock market. Value investors look for stocks they believe are underpriced. They're searching for hidden gems that other investors might have overlooked. It's based on the idea that sometimes the market isn't totally rational. This can create opportunities to buy stocks at a discount and profit when their true value is recognized. Warren Buffett is probably the most famous value investor. He's made billions using this approach. Now, if value investing is about finding hidden gems, growth investing is about spotting the next big thing. Growth investors look for companies with strong potential for future earnings. They're less concerned with current profits and more interested in how a company might perform down the road. It's a bit riskier than value investing, and you might not see any dividends. But if you pick the right company, the returns can be huge. Speaking of dividends, that brings us to our last strategy, dividend investing. This approach focuses on buying stocks that pay regular dividends. It's like owning a rental property. You get income just for holding on to the asset. Dividend stocks are often seen as safer investments because they tend to be more stable. They can be especially attractive during market downturns when stock prices might not be growing. Plus, depending on where you live, dividend income might come with some tax advantages. Each of these strategies has its own pros and cons. Some require more patience, while others might involve more risk. The key is finding the one that fits your financial goals and comfort level. Remember, successful investing isn't about getting rich quick. It's about making smart, informed decisions that align with your long-term objectives. Specialized strategies, from news to reversals. Now that we've covered some of the more common trading approaches, let's explore a few specialized strategies that can give you an edge in the market. These methods might seem a bit more complex at first, but they can be powerful tools in the right hands. First up is news trading. This strategy is all about staying on top of current events and understanding how they affect the market. News traders are always watching for big announcements, economic reports, or even tweets from influential figures. The goal is to predict how the market will react and make trades accordingly. As one expert puts it, news trading is a more advanced trading strategy that requires you to stay on top of news and know how to interpret it. You'll need to be quick on your feet and have a good grasp of how different types of news can impact stock prices. Next, we have breakout trading. This strategy focuses on stocks that are about to pass important price levels, known as support and resistance lines. Breakout traders watch for stocks that are ready to make a big move. They often look at trading volume to help predict when a breakout might happen. One trader explains it like this: breakout trading involves a stock breaking through a previous key resistance level. Imagine a stock that's never traded above $100 suddenly rockets up to 101 on heavy volume. Breakout traders might grab that stock. On the flip side, there's reversal trading. This strategy is all about spotting when a stock's trend is about to change direction. Maybe a stock that's been going up for weeks suddenly starts to lose steam. Reversal traders try to profit from these trend changes. They use technical charts and trading volume to guess when a reversal might be coming. As one expert notes, reversal trades look for a stock's change in trend. Maybe a stock had a massive run-up but ran out of steam. Now traders are starting to doubt the company's future. That can lead to a trend reversal. If you're looking for something a bit more advanced, there's options trading. Options are contracts that give you the right to buy or sell a stock at a certain price by a certain date. It's a complex strategy that involves understanding things like premiums, strike prices, and expiration dates. One trader explains, options are complex. They're contracts that give you the right to buy or sell a security at a certain price until a certain date. Lastly, let's talk about Forex and commodity trading. These strategies take you beyond the stock market into currencies and raw materials. Forex trading involves betting on how different currencies will move against each other. Commodity trading deals with things like oil, gold, and agricultural products. Both can be influenced by global events and economic trends. As one expert puts it, commodities are raw materials like soybeans, copper, gold, and crude oil. Traders buy or sell futures contracts on a futures exchange. This is similar to trading stocks. Alright, we've covered a lot of ground in our trading strategy maze. But now comes the most important part, figuring out which path is right for you. It's time to craft your own trading blueprint. Remember, there's no perfect strategy that works for everyone. Your approach should align with your goals, lifestyle, and how much risk you're comfortable taking. Let's recap the strategies we've covered. We've explored everything from lightning-fast day trading to patient long-term investing. Each has its own set of pros and cons. Now it's your turn to decide which ones resonate with you. Consider your schedule, your financial goals, and how much time you can dedicate to trading. Once you've chosen a strategy, it's crucial to focus on risk management. No matter which approach you pick, protecting your capital is key. Start small, use stop-loss orders, and never risk more than you can afford to lose. Remember, even the best traders have losing trades. It's how you manage those losses that makes the difference. Ready to test your chosen strategy? Start with paper trading. It's a risk-free way to practice and refine your approach before putting real money on the line. This will help you gain confidence and iron out any kinks in your trading plan.